Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about 5 agrochemical companies that you can invest for the next 4 5 years and make a lot of money. So this is the Independence Day special in which I am bringing you the agrochemical sector in front of you, which has come out of the mires after 4 5 years of downturn. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about the agrochemical sector, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions on a daily basis. And once you get the $10 Patreon membership, you'll have access to markets, you'll have access to a lot of articles and podcasts from my end, and you'll have these kind of articles that you'll be able to publish over a period of time that I publish, and every now and then I start publishing podcast. Even today I have published one as why markets go up or down, and then I have my portfolio also in these podcasts and articles. Updated portfolio is right here, so you have access to a lot of things that are not there on my you can say YouTube channel, and that access is only for $10 a month. That is 750 rupees a month that you can have it. So kindly join that. Over 100 patron members I already have. Uh, the criteria for this investments over these 5 stocks in the agrochemical sector, it goes like this: that they are established brands, strong management, so they are very good companies in this agrochemical sector. They are not those small cap companies that we less know of. Diversified yet market leaders in their own stream, absolutely low debt or no debt, and no pledging at all. Strong institutional and you can say company holding is in there, and solid ratios, return ratios and numbers have always remained good even in difficult times for these companies. If you want to allocate the stocks, put 4 lakhs in each stock. So you have to go ahead and put in 4 lakhs. So what you can do is putting in 20% of your total money. If you're making a portfolio for 1 lakh rupees, you put in 20,000 in each of the stocks and buy over the next 1.5 years. Keep on investing into the companies and hold for the next 5 6 years, and it should grow at a good CAGR of 24-25%. These are good companies that could grow at that CAGR. Now again, standard disclaimer always apply that I'm not promising you anything here. It is just that my assessment is they could grow at 25-30%, but with the kind of elevation that the stocks have already seen, it could be lesser than that. But you can expect between 15 to 20%, 15-16% returns safely in it, and keep a 30% stop loss. Once you complete your buying, you have an average price. Keep a 30% stop loss from that average price so that you don't lose everything in the stock if anything goes extremely wrong. Now these are my picks. First of all, the first value pick is, and this is a very marquee brand and expensive at these valuations, at the current valuation, but this is pretty good, is Bayer Crop Sciences, a leader in crop protection and agri sciences, and gaining market share in this downturn. So what happens is, whenever a downturn hits, many of the smaller companies and unorganized players are not able to either produce that much of product because of the things that we have seen on the ground, that there would be lesser people at hand, there would be a complete or partial shutdown that is continuing. There could be less resources for those companies in terms of cash, etc., to continue with the business, and they might have to virtually shut down for 2 months or so. But these businesses like Bayer Crop Sciences, etc., do work at some capacity, 20-30-50% capacity, and they have the cash to go through this pain of these periods of such tumultuous period with the kind of situation that we are having, and hence they will be able to sell their products, maybe at a lesser price than they were doing and with a lesser margin, to those clients also, for the whom they might not be ever doing it. So they might be gaining a lot of clients because those clients need crop protection products and they are not getting from other companies. So if lesser companies are working at hand at the current level, of course the larger players will gain market share. The best of the lot at the moment, in my opinion, great moat and longevity of the business, consistent growth expected going forward with the kind of monsoon that we have had and expected over the years, that whenever this cycle turns as well, things get really good. So hoping to see two, three good monsoons in the next 6 years. The company should have a good moat. Buy on major declines. Do not buy at these levels. All these companies, I would suggest that whenever major decline come in over the next couple of months, start investing into it. It have been surging since the March lows, so be careful at these levels. But yes, you can invest little bit into all these companies. The second stock in my list is PI Industries, very good company, top agrochemical firm. It boasts of nearly 20% of the market share to the products that they are making. So that's a lot when you consider that they are very, there are a lot of, you can say, smaller players, there are a lot of listed players, and there are a lot of unlisted players, plus there is unorganized market, for whom we don't know, the gray market as they call it, in which you have local products that are in the same space. Yet PI industry is a giant there with a 20% market share. Strong management again, and return ratios are very good, and there are many brands that they serve here in India and globally. So not only in India, PI industry serves to the global marketplace, as do Bayer Crop Sciences, and they are the pioneers in largest seller of granule formulations. So this is one of the formulation that is widely used in crops and in, you can say, feed, etc. Have export to Australia, the Americas, parts of Europe and Asia. uh, Plus the valuations are better than what Bayer Crop Sciences is currently. Again, invest on major 10-15% at least decline from these levels. Wait for market fall to get into such companies. Third pick in this list, and a dubious one, you can say a controversial one, but UPL is a very good company. You cannot ignore that when you are talking of the agrochemical sector. A leading player in phosphorus and chemicals for variety of agri needs. So remember that all these companies that I'm talking about are in the agrochemical domain. They do provide crop protection products, but they have crop nutritions. So they have different sort of a businesses in their own niche, and they are market leaders in that niche. So they are pretty good. So it is not that one company is eating over the market share of another company. They are the leaders in their own niche businesses. Have expanded globally over the last decade. So I remember about 8 years back, UPL was a very small company, 300-400 crore company market cap, or 1000 crore market cap company, and was serving most parts of India and you can say neighboring countries. But now it has expanded globally. Valuations are very attractive. Any declines towards 400 levels could be bought into. High institution and promoter holding there, only 7% free float, and will be a front runner once things normalize. So this company really does well when things were normal, say Jan Feb, and it has really gone down because of the pandemic that has taken place. Strong management, and will perform well over the next decade. So let's see, after UPL, what are the other two picks that I currently have in my kitty. So let's go on with the presentation. So the next pick in my list is BASF, an interesting company and a very good one. For years it has been established and also listed. They provide variety of industry solutions for the agrochemical industry. Serves agri, materials, industrial and nutrition care solutions, among others. So they are not just agrochemical products driven, or driven with only you can say crop protection products. They also have industrial products and nutrition care products as well as materials, have been surging from the March lows, as has other companies as well. Strong return ratios, high interest is a concern. So the only problem with BASF is the high interest that they have. So debt is not that low compared to other companies, but strong institution and promoter holding, and it has a very good pedigree over the years for performing even in difficult circumstances. One of the best, again on major declines, should be bought into. It's not that you go ahead and buy the whole lot today. Wait for market decline of at least 400-500 points, and then look at how the agrochemical sector is doing, how these stocks are doing, and then invest little bit. Next up is Bharat Rasayan. It is a new player, new listing, not known a lot earlier, but has come up with very strong numbers, and looks like it is one of the companies, a smaller player, that is gaining market share from other companies. So we have to keep an eye on it. Again, the stock has run up a lot, so be careful. Leader in producing technical grade pesticides and intermediaries, so they are into that pesticides sector, and that's why I did not put some of the insecticides and pesticide company in here, because I feel Bharat Rasayan has a gamut of products which includes pesticides as well as crop protection products, uh, other crop protection products, and that's why it trumped other companies, and I wanted to put only five companies in this list. Gained market share in this turmoil. It looks like that it has been gaining market share because of the kind of numbers that it has been producing. High promoter and institutional holding, strong stock and high return ratios are always there, and this is one of the biggest reasons why it has just eked in at number 5. It was attractively priced at 23 times just a month back. Currently it has run up a bit. You can buy it around 24-25 times earning, 23 times earnings. When it comes down to that, wait for declines to get into it. One of the emerging agrochemical companies, I would say. Interesting company. In declines should be bought into. So this was a video on some of the agrochemical picks. Again, I would say a happy Independence Day to all of you. Kindly be safe, and please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.